There is, on the fringes, people who think that the entire system, economic system of the West could collapse because of what's happening.
Yeah.
We could blow ourselves up with hyperinflation. If you're in that position, you have to be holding something that is completely immune to that, something that is not priceable in fiat currencies that are being printed away into infinity. And the answer to that in history was always gold. The answer to that online now increasingly and vocally is also Bitcoin. Hello everybody, welcome to the Mouthy Money podcast. I am joined as ever by my good co-host Chris Tuite, who's Head of Consumer Finance at Communications Consultancy MRM. Chris, good morning, hello.
Hey Ed, how's it going?
Very well today actually. I am about to go off on my first holiday in about six months, first proper holiday. So
I hope you have a better experience initially than I did. See our previous pod on holiday disappointment listeners.
Absolutely.
If you want to hear what went on there.
Yeah. We're not going with Jet2, I'm afraid. We are going with a competitor though, so
right.
That is
many holiday firms are available, except
absolutely, exactly, yeah. Not the BBC here, but yeah. So today we don't have a guest; it's just you and I. But that's because I've got something to talk about before I go off on my travels. Mm-hmm. I think, Chris, it's safe to say there's a lot going on in the world at the moment.
Yeah. Would
that be fair?
Picking up the news. Well, I was going to say picking up the newspaper. Who does that? Picking up my phone and digitally turning the pages of my newspapers, there's quite a lot going on in bond markets. Everyone's getting scared about the UK and Western democracies, all that stuff that's happening in America. Chat about stock markets being vastly overinflated and overvalued. Yeah, there is a lot going on, Ed.
Yeah. So bond markets and things like that aside, and I think it's sort of the starting point of the discussion that we're going to have today that is largely couched around something that I'm doing with my own investments. And this is something we allude to a lot on the podcast, but we've never really done in any great detail. So this might be the first time we've done some proper detail on what you and I are actually doing with our investments. But although today we're looking at what I'm up to. And obviously stress that we don't give out financial advice here. And obviously investment, carries risk and you can lose all your money and that kind of thing. What we're doing today is I'm just going to talk about something in particular to do with what I'm doing with my pension and why that's relevant to kind of the world at the moment.
Oh, it's a bit controversial, right, Ed? What you're planning?
Yeah, it is. I mean, well, perhaps. I mean, I'd be interested to hear from a financial advisor who might have a severe disagreement with what I'm about to tell people I'm doing.
Let us know in the comments, listeners.
Yeah, please do. So that brings us to the headline of the podcast, which is Bitcoin or gold in my pension. So as we said at the top, things are going bad in the world. Things are looking a bit funny, but nothing's kind of imploded yet. It's all just, there's alarm bells going off, right? Now, I don't know about you, Chris, although we have talked about our pensions and how we kind of allocate them in the past. My pension, pretty much since I had one, I've just stuck it all in kind of global equity market index trackers. And that's a pretty typical thing to do. It's cheap. Index trackers are cheap. You're just following the market. Outperforming that kind of stuff is pretty difficult. So often it's just cheaper to, just do that, let it follow. But when you actually look inside those index trackers, quite a lot of the time, it's pretty heavily US weighted and that kind of thing. And the thing that really is getting me nervous now is looking at what is going on in the economies of countries like the US and the UK. And for me, that the big scaries, and this is something that increasingly is being expressed in the bond market getting upset, is the US government is printing and spending massive amounts of money. Incomprehensible amounts of money, let's call it. Now, inflation there is not really barking yet, but we've got similar things happening here. It's slightly different. The problem we have in the UK is inflation is too high. I mean, it's depending on the measure you use, it's just under 4% or over 4% on the CPIH, which is supposed to be the champagne measure these days. The very fact of the matter is that the target of the Bank of England for 2% inflation, and we are at double that. If you look at the past 10 years, the rate of inflation has been above its target for more than 6 of the last 10 years. And that's because we had a bout of inflation in 2017. Then post-pandemic, obviously we had that big surge. It came back down and lo and behold, inflation has popped up again. And now there's a lot of discussion about why that is. It's because of one-off things like national insurance hikes and minimum wage hikes and that kind of stuff. The fact is that inflation is uncomfortably high. So the question to ask then is, well, the question that I've asked myself is, if I'm slightly uncomfortable with how my investments, my long-term investments are expressed, then what should I do about it? And basically, Chris, I've turned to the oldest answer in the book, which is finding myself a safe haven. I mean, what does that amount to? It amounts to investing some of my pension into gold. Essentially, that's what it amounts to. So the big question here, and this is something we talked about in a previous podcast where we had Daniel Parkinson on the Bitcoin IFA, is, is gold the only safe haven, or is Bitcoin also now the place of safety? And this is part of the reason why we talked about this fear. So, Chris, do you have any gold? Are you aware of any gold?
No, see, I've gone very boring in the past. So I'm interested that you've reached this stage. I do have some Bitcoin, as I think I mentioned in the podcast with Dan and your good self. And that was an experiment, right? That was, let's see how this works. And the best way to see how something works is to have some skin in the game. Basically, a group of friends got together in the pub and nagged each other until we took the plunge. And, it's worked out relatively well, actually. After an initial massive drop off, we've ended up doubling, from the point that we were at previously. But that is only a small, amount of my portfolio, which I set aside that I was quite happy to go to zero. More generally, I have long-term savings and short-term savings is the way I look at it, or short to mid. And I have a bit of a cash buffer because of uncertainty out there and because I've got 2 young kids, and we talked in the last pod about home improvements and things like that. So there's money that I'd want to be able to get my hands on pretty pronto. And then I've got a couple of pensions. So a SIP, which is comprised of old workplace pensions that I consolidated into one place. And then I've got my company pension, right, which we all should have, or everyone listening to this should have, unless you've opted out. My view is that short to mid-term money, I agree with the wobbles and in terms of the US and stuff like that. So it's in cash, which is also a kind of safe haven. But inflation that you mentioned there is a major issue. And I'm starting to fall down on the idea of that money sitting on the sidelines, because I do think there's a correction coming in stock markets. And then when that happens, maybe I'll buy some more. Now that's a different, more stocks, and through sort of index trackers. And then you go into my pensions, my SIP in particular, and my children's JISA. I have a really long-term time horizon on all of that sort of stuff. So I bought a series of global index trackers. So what I mean by that is not actually, I've got one global world index tracker, but then I bought the regions and then some other things around ethical investing and stuff like that to try and broaden it out into all sorts of different, get some more upside, etc. And my view has been invest a little every month into all of that stuff, do the pound cost averaging thing. And whilst it may take a hit in the near future, over time, I'm going to end up on that. That has been my sort of strategy. So I'm really interested to hear your approach, Ed, because that feels a bit nuclear to me.
So I'll elaborate a little bit on my side. In actual fact, it sounds like our situations as they exist today are very similar. I have 2 pensions. I have my workplace and I have a SIP, which is basically my collated pensions from old jobs that I've kind of put together. The workplace pension, obviously I'm putting regular contributions into that. I'm not going to touch that. That's invested in kind of global index trackers. It's just going to sit. I'm not going to touch that. What I'm actually talking about today is the SIP, which I'm not contributing anything to at the moment. So the qualifier here, and you mentioned it there, is that pound cost averaging. So because I'm continually contributing to the workplace pension pot, I think if stuff goes down in the medium to short term in that pot, I'm still buying in on a monthly basis. So I'm catching some of those, lower levels when stuff does fluctuate, and that will average stuff out. So I don't want to touch that. I'm going to leave that alone. Just let it get on with it, kind of thing. The SIP has become, and the SIP is now my kind of, it's basically, this is my refuge fund. This is if everything goes completely wrong fund. And it's
how wrong, Ed?
Oh, no,
how wrong are we talking?
Oh no, I'm being genuinely here. I'm talking about and look, I don't want to be, overly dramatic, but there is on the fringes people who think that the entire economic system of the West could collapse because of what's happening.
Yeah.
We could blow ourselves up with hyperinflation. And if you're in that position, you have to be holding something that is completely immune to that, something that is not priceable in fiat currencies that are being printed away into infinity. And the answer to that in history was always gold. The answer to that online now increasingly and vocally is also Bitcoin. And obviously there are people who are very, very passionate about that. I always try and look at this as dispassionately as possible and weigh it up as kind of probabilities and things like that. So what I'm doing now is I'm getting out of what I'm in my SIP, which is a fixed amount. At the moment, I think it's about £12,000 worth of stuff. And it's not huge. I'm not talking huge amounts of money here, but that's probably about a quarter of my total pension funds at the moment. But that will, depending on how those assets perform, they'll either start to look a bit smaller over time, or if things really do go badly for the kind of the normal economy, then it might start to look rather bigger. So gold is gold is the oldest asset in human history. It is basically the OG thing that people would buy and hold in order to retain their value. I mean, I'm serious. Like,
no, I know. I just like the term of OG.
Yeah, well, look, this goes back to Celtic warriors on the fringes of the Roman Empire. I'm not kidding here. They would have bands of gold that they would wear around their necks as a form of banking system. That is how they held their wealth. They would rob and pillage and sack their enemies, towns and forts and whatever. They would take their gold, they would melt them down into bands, and they would literally wear them.
Celtic bling. Celtic bling.
Yeah, no, quite literally. And this is something that has actually transcended through human history to modern times. I mean, I come from an Italian family. My Italian family love gold. They all have gold jewelry and they give each other gold gifts. And I've got like a gold necklace that has been handed down to me from my granddad and that kind of thing. People wear their bank. And that's quite, so obviously I'm not going to start wearing my SIP.
I was looking forward to seeing what kind of, it was a SIPP with a bit of ice in the middle for the,
yeah, like a big SIPP.
Yeah. Yeah. Safe haven.
Yeah, safe haven. So there's a few different ways you can hold gold. So the main thing I'm doing at the moment for my SIP, because obviously there's tax efficiencies that involved holding it in a SIP, and this does come with fees because you have to buy a product from somebody, is just buying a gold ETF tracker, basically. It's very cheap.
On that tracker, does that buy? So this is where we need to talk about this more in the future. I think we're gonna talk about that with some experts in the near future. But
yeah,
does that buy the actual asset, or are you tracking the price of this thing? Is it synthetic, or is there actually an underlying asset that?
There are ways to do both, basically. I mean, I would always personally buy an ETF that states that it's got the underlying asset sitting in a bank somewhere with your name on it. I think that's really important. The synthetic stuff, to me, they can use debt instruments and that kind of thing to make that value appear on a page, and it makes me more uncomfortable. Gold is a physical asset. I would like to know that somebody's holding it for me, kind of thing, ultimately. So that's what I put the main thing that I would put into my SIP. And the main thing that I've done, I picked a BlackRock one. It's very cheap. It's like 0.2% kind of management fee. You barely notice it touching the sides, kind of thing. And that's the main thing for my SIP. The other thing I am actually looking at as well, and this is the bit of the madman, Mad Max world coming sort of thing. I haven't decided whether I'm going to do it yet. Is looking at getting Royal Mint bullion, because I could see myself burying a coin hoard somewhere, and that's my that's my real insurance policy, Chris. That's when I turn up with my axe, and there's no communications anymore in the world, and that's when my pot of gold, literally bury my pot of gold at the end of the rainbow.
It's gone wrong when Ed puts on his Celtic chain and is wielding his axe in his garden. Yeah. That's it. We know that's it. Head for the hills.
You see me digging a hole somewhere in the countryside, start running. Just start.
It's
running.
finished. It's finished. Yeah,
it's over. But okay, so the thing I find really interesting about that, and obviously that's something I'd have to contribute separately to, because you can't do that through, a wrapper, is actually if you buy certain denominations of bullion that you could buy from the Royal Mint don't have capital gains tax on them.
Okay, that's strange. Why only certain denominations?
Because some of the literally coins that you buy from the Royal Mint are classed as legal tender. So you can use them to pay for stuff.
Wow.
Weirdly. Not that you would, because it
not that anyone and nowhere takes cash anymore, Ed. So turning up with gold bullion might be.
Yeah. But the point is because they're classed as sovereign coins, you can go to a bank and exchange them. Well, not actually quite that simple, but you can exchange them for money, and you don't have to pay tax on it because you're holding something that is a denomination of the currency. Basically, but it's physically backed. The value of the coin that you hold is physically backed by gold, as opposed to, it is a form of gold standard, weirdly, that still exists in our currency. So that is something I definitely think about. I mean, the main thing being because capital gains tax is quite high, and the capital gains tax allowance is pretty low. And actually, if you buy gold coins and then sit on them for ages, there's probably a good chance that you're going to have some sort of gain on that because gold, it goes up and down, but when the world is printing lots of money, it tends to go up. Obviously, future performance, etc., is, you know, not an indicator, but we have pretty good examples in the past of where that happens. So that's kind of the gold that I'm doing. Now, this brings me to the Bitcoin side of things, which obviously we've spoken about recently. And this is the kind of
check that out, listeners, if you haven't before. Good chat with Dan Parkinson.
We'll put a link in the summary so you can go back and have a look at that.
And we'll try and talk to Dan again as we get closer to some more developments here, and as Ed continues with this crackpot plan.
So we've got so the ban on Bitcoin ETFs in the UK is lifting. Not ETFs, sorry, ETNs. Let's be careful with our discussions here.
Yeah,
is lifting at the beginning of October, I think 8th of October. So my cunning plan at that point is to look for something, you know, a product that I could put in my, notionally put in my SIP that is a Bitcoin denominated product. Now, this gets a bit tricky, and I've done a little bit of rooting around on who's going to be offering this stuff, and there's not a lot of information out there. I'm quite keen to have Bitcoin as a bit of a differentiator from gold. I haven't decided what that kind of mix is going to look like. I know that people who love Bitcoin are going to tell me in the comments. Please do tell me in the comments that I need to put it all in Bitcoin. But I'm conservative. I do want to hold a little bit of this, a little bit of that, and have my eggs distributed carefully, basically.
Mm-hmm.
But yeah, so with that, actually, if anybody's interested in the ETN discussion and what's coming up, we are hopefully going to have some interesting people soon on the podcast telling us about, you know, which products are coming, which are going to be the good ones to go for, and how those are going to be structured, because there is a variance between ETFs, ETNs, they call them ETCs as well, exchange traded commodities. There's various different kind of ways to wrap the product up. I know in the comments we had in the previous video that we had, some people were kind of pointing out that ETNs are debt-based, so they can be a little bit more dangerous, especially if you buy one from a company that then goes bust. You're basically not protected. There is no protection there. Whereas if you buy something that is actually backed by the physical asset, again, back to this conversation about buying a product that is backed by the physical asset, there is a little bit of protection there at the end point if the company that's provided you with this instrument then goes out, you know, goes bust or whatever.
Mm-hmm.
So my kind of takeaway here is, anybody who's listening who's interested in this area, you know, should we have Bitcoin or gold in pension and that kind of thing? Because these are real questions that are now possible. And we are going to be looking more at it. So please give us a follow and keep an eye out, because, yeah, I think there's a lot to come on this very interesting area. So with that, any final thoughts, Chris? Do you think I'm completely mad? What is your feeling on it?
We've had this conversation before in terms of in the other pod I mentioned before, but there is this warning that it could go to zero, right? You're aware of that. Yeah. I mean, safe havens going to zero seems a bit of a contradiction in terms, but you know, I think there's been some good arguments made around that. I'm not in that school. I don't think that will happen. I think there's enough precedent set now, real world use cases, enough big names talking about this kind of thing where it's not going to go that way completely. But that, you know, there has been some kind of volatility in the past around it, which you seem comfortable with, and that's kind of the key thing. I don't think I'll be doing it anytime soon, just because I've got that kind of long-term thing. But I do. You're right. We're coming at the same problem with slightly different perspectives. I'm not really anticipating having to get my axe and go out onto the plains to fight for tins of beans. I don't think that's going to happen. I don't mean to be flippant there. I understand your point. There is a lot of structural problems here, and it has been stored up for a long time. And where the Bitcoin sort of difference between that and fiat currency and central banks printing reserves and all that kind of thing is that there's a finite amount, and that therefore that should in theory restrict that from happening elsewhere and help it to retain its value. So I can understand intellectually where all of this is going. I just don't think I'm ready to do that yet, but I am very interested in the conversations we're about to have, frankly, with some people here, and to understand what's in the weeds of these sort of offers and products and how they work and what the potential pitfalls are and what exactly I'm buying when I do that. And then, you know, maybe this time in 3 months time, I might be slightly swayed on that. So I'm looking forward to having that conversation. Obviously looking to see how your I was going to call it an experiment, but it's not. It's a position, right? How your position sort of plays out.
I'm taking a strategic position here. I think ultimately, in my mind, it's like I want to have what everybody's doing and the markets go up, et cetera, but now it's about having, that's something a bit different in my portfolio. Let's put the world's oldest asset, which has 4,000 years of track record in it. but let's also put the world's newest safe haven asset in there as well. And those hopefully will either complement each other, mitigate each other, or maybe it won't work. But I think the thing is, if you've got a small enough position on it, then, worst case scenario, and it goes to zero, you are diversified in a few different ways. So that's not going to, kill your hopes and dreams. But if things do really get bad, then it might have been, proved to have been a good decision, basically. So I think it's basically, for me, it's about, and this is something that a friend of mine always says, at this point, it's about having skin in the game. I mean, you've already got skin in the game, you've got a little bit of it, being exposed in a little way to what may or may not, come in the future. I think that's what it comes down to for me, basically.
Yeah, look forward to seeing how it plays out.
With that, please do give us your thoughts in the comments if you've got a view on this, what kind of balance you might have, if you've got a portfolio with these kind of, and you've got these things in your mind. Obviously, please do remember that we are not providing financial advice. Your investments can go up and down. This is just for informational purposes and entertainment. So with that, thank you, everybody. We'll see you all again very soon, and goodbye. Thank you for tuning into the Mouthy Money podcast. Don't forget to hit like and subscribe on all our content. Follow us for more on your preferred podcasting channel, including Spotify, YouTube, or Apple Podcasts. Stay in touch by following our social channels on Instagram, TikTok, and LinkedIn. And don't forget to subscribe to the Mouthy Money newsletter on mouthymoney.co.uk. The Mouthy Money podcast is produced for general informational purposes only. It should not be construed as investment, legal, tax, or other forms of financial advice. If in any doubt about the themes expressed, consider consulting with a regulated financial professional for your own personal situation. Past performance is no guarantee of future results. Investments can go down as well as up, and you may get back less than you started with. Never invest more than you can afford to lose. For more information, visit fca.org.uk/investsmart for more. Thank you.